It's 1 p.m. Time to go around the world of business in 55 minutes. And it's a very special one for Nigeria today because on Business Incorporated, it's decision day as the MPC concludes the two-day rate-setting meeting. Divided views from analysts. On one hand, there's an expected hike. On the other, there should be a breather. We're going to have to do more than 55 minutes today as we await the decision of the MPC, the second one this year, and under the administration of Dr. Olayemi Cardoso. A month ago, 400 basis points hike is what we saw on the interest rate. I wonder what we will have today. But before we get into that, let's have a little bit of a walk around the world. Oil prices was a little changed on Tuesday after rising in the previous session as investors took a more mixed view towards the loss of Russian refinery capacity after recent Ukrainian attacks, while a slightly weaker US dollar offered some support. Brent crude futures for May slipped 12 cents to $86.63 a barrel, while US West Texas Intermediate crude futures fell 8 cents to $81.87 a barrel. Brent rose 1.5% in Monday's session, while WTI gained 1.6% higher after Russia's government ordered companies to cut output in the second quarter to meet a 9 million barrels per day target to comply with pledges to the OPEC Plus consumer group. Russia, which is a top 3 global oil producer and one of the largest exporters of oil products, is also contending with recent attacks on its oil refineries by Ukraine. Goldman Sachs analysts are estimating the attacks have knocked out about 900,000 barrels a day of capacity, possibly for weeks, and in some cases, it may be permanent. Still in the global space, Chicago wheat futures rose on Tuesday and were trading near a 3-week high, supported by concerns that exports from top supplier Russia could be disrupted by dispute between shippers and regulators over grain quality. Soybean and corn futures fell ahead of a U.S. Department of Agriculture planting intentions report, which is due on Thursday, that could move the market. The most active wheat contract on the Chicago Board of Trade was up 0.2% at $5.56 a bushel after reaching $5.67 on Monday, and that's its highest since March the 4th. Prices had slipped to $5.23 for half a bushel this month. That's their lowest since 2020 due to huge supply from Russia, and speculators are betting that prices will fall. Russian authorities are preventing the processing and shipment of about 400,000 metric tons of grains. The owner of one of Russia's largest grain and exporter disclosed this. Analysts predict that shipment from Russia could set a new high for the season. Now, looking at other crops, we see that corn was down 0.2%. CBOT soybeans also was down 0.5% to $12.03 for 3/4 of a bushel. We're still in the global space. Gold prices were stuck in a tight range on Tuesday as investor focus turns to U.S. inflation that's due later on this week, which could shed more light on the timing of the Federal Reserve's first interest rate cuts this year. Spot gold was flat, $2,170.59 per ounce. U.S. gold futures edged lower also, 0.2% to $2,171.20 per ounce. Chicago Fed Bank President Austin Goolsbee has said that at the Fed's policy meeting last week that he penciled in 3 rate cuts for this year. Meanwhile, Fed Governor Lisa Cook cautioned the U.S. Central Bank that it needs to proceed carefully as it decides when to begin cutting interest rates. Investors now look forward to the U.S. core personal consumption expenditure price that's due later on this week. That's on Friday, and is seen rising 0.3% in February, which will keep the annual pace at 2.8%. Traders are also pricing in a 70% probability that the Fed will begin cutting rates in June, according to CME Group. Lower interest rates, reduce opportunity cost of holding bullion. Looking at other metals now, spot silver eased 0.2% to $24.63 per ounce. Platinum fell 0.1% to $901.30. Palladium edged lower also 0.1% to $1,003.75. All right, now let's go to Berlin and see what's going on there. We see that just weeks after enacting its long-discussed Digital Markets Act, the European Union is investigating the world's three most powerful tech giants. I wonder who they are. We won't want them for long. We have Lars Holter now joining us with the details. Hi, Lars. Good afternoon. Who are these mighty tech giants?
Thanks for having me, Ini. So Brussels is going after Apple, Alphabet, and Meta, investigating those companies for breaking the Digital Markets Act. This relatively new law challenges demands that tech giants have to make it easier for people to move between competing online services like social media platforms, internet browsers, and app stores. It is for consumer protection on the one side to avoid consumers becoming too dependent on one particular provider, but it's also to make it easier for smaller companies to compete in the market. Let me give you an example of what the EU is looking into. They want to see, for example, whether Apple allows users to easily uninstall software applications on its iOS operating system or to switch to a rival browser or search engine on an iPhone. As for Alphabet or Google, to use the company's biggest brand, the EU wants to know if the company favors its vertical search engines such as Google Shopping or Google Flights and Google Hotels over those of rivals, and whether it discriminates against third-party services on Google search results.
So what's the response of these companies?
They are worried. Violations against the new act could result in fines of as much as 10% of the company's global annual turnover. So this investigation is something the companies are taking extremely seriously. But they're also a little annoyed, and understandably though, because they say they have already deployed thousands of engineers to meet all the Digital Markets Act requirements. And it has been reported repeatedly now that they're making a serious effort to give users and rivals more choices. Apple says it is confident that it is currently in compliance with the Digital Markets Act and that developers throughout the process have incorporated the EU Commission's feedback into its changes. Google's comments sound similar. They say they have engaged constructively with the European Commission. We'll see how this turns out if Brussels agrees with their feedback being taken up, but it looks like this is definitely going to be a longer investigation.
We'll follow the investigation. What about the markets now? What are investors doing or saying?
So looking at Asia, we're not getting much to go by, a mixed performance there. Traders mostly focusing on anything they can gather about US interest rates as usual. But for a change now, we're also slowly getting into earnings season. And that will be exciting over the coming weeks because some people in the market think that with several markets at record high, expectations with regards to some companies' profit and outlook might have gone too high. Now, if that's the case, and we see some disappointing numbers, we could be in for a bit of a correction.
All right, Lars, thank you so much for that. Now let's move to London, where it's a bit of good news, although Juliana would tell us if really it is good news. We see food inflation in Britain has slowed to 4.5%, but I hear a lot of people still are not feeling this drop in the numbers. Juliana joins us now with the reality of it. Hi, Juliana. Good afternoon. So does it feel like inflation is dropping in the UK?
Good afternoon, Inni. It does, but I suppose it depends who you ask, because you're absolutely right. According to the detail which was released, the data that was released by Kantar this morning, it does show that 25% of British households are still struggling with the cost of living crisis, and food has been a major proportion of that. However, there is some good news, because according to that official data from Kantar, we can see that food price inflation has fallen to 4.5%, which is significant because this time last year, it was at 17.5%. And this, of course, had a lot to do with the invasion of Ukraine, particularly when it comes to wheat prices and those basic staples that people had taken for granted. So yes, it is good news that it's fallen so significantly, not just year on year, but also month on month, because the data in February showed that food price inflation was at 5.8%. There are some nuggets there, one of them being that the amount of money that shoppers are spending on budget and discounted foods has increased by about £605 million in just the past year. So discounted food, of course, is food that may go off tomorrow or in a couple of days. But if you can cook it tonight, why not get yourself a bargain? That's what UK households are doing. And hopefully we will see prices trickle down even further, because we know that the Chancellor, Jeremy Hunt, had summoned shopping CEOs, I think it was a couple of months ago, basically asking them to start trickling down the prices and the price cuts that they were seeing at wholesale level. So that's what they've done as a legal requirement. So hopefully, as it gets much more warmer and seasonal food starts coming in, those prices will drop even further.
Yeah, well, I wish I could say that about Nigeria, but I don't think we can say that anytime soon. But let's look at the markets now and see how that's doing at intraday.
Yeah, it's been a yo-yo on the markets this morning. Of course, everybody is reacting to that breaking news we had a couple of hours ago about that shocking fall of the bridge in Baltimore. Now, it may just seem like a humanitarian story, but of course, let's not forget that this was a huge ship carrying cargo, and that Baltimore port sees hundreds of tons of cargo come through it during the day. So this is going to have major global implications when it comes to shipping and trade in the US. We're already suffering from what's happening in the Suez Canal. So expect more market reactions to filter in during the day. It's already reached London because the FTSE All Shares up. It's up 0.01%, but the blue chip index, the FTSE 100, it's down at intraday, down by 0.06%, though the domestic market, the FTSE 250, at intraday, it's up by 0.21%. In the currencies market, the British pound still rallying against the US dollar. It's up by 0.21%, up against the euro 2 by 0.01%, and the British pound at intraday is up against the Japanese yen by 0.17%.
All right, Juliana, thank you so much. It's decision day in Nigeria, so you might as well. Let's see what's going to happen at the close of or at the announcement.
I'll be tuning in.
I know, right? Thank you so much, Juliana. All right, now, talking about decision day, let's set the pace for that conversation right now as we look at the existing numbers for major economies on the continent. And Anete Edet has those details to give us. Hi, Anete. Good afternoon.
Good afternoon, Nini. Yeah, I think I'm doing a shift away from my market analysis, and this time looking at...
It's a special day.
Especially, yeah, just like you rightly said, inflation is a global problem because last week we saw the big threes, the US Federal Reserves, the European, the ECB, the European Central Bank, as well as the Bank of England, holding interest rates. But for Nigeria, it's...
And we see inflation dropping in the UK. So,
exactly.
I mean, there must be something they are doing that we can learn from.
And even back home in across Africa, we had just Ghana inflation, their inflation for February, it dropped, it pulled back, it made a slight pullback. But of course, Nigeria has been raising interest rates for about 10 consecutive times now, which started sometime in 2022. But we're still expecting that after that mother of all hikes, which is the highest in the country's history, well, there's a consensus that there is going to be another rate hike. Is not going to be dovish.
I don't think it's a consensus, Anita, because
it's a
I've spoken, it's a split. Some analysts, like yesterday, we spoke to Mr. Johnson Chukwu of Cowrie Investments, and he thinks that it could be a hold because it was just a month ago, as you said, we had that very aggressive hike, and it might be good if the MPC decides to see the impact of that hike, before they make the next move. But I mean, I'm sure we're almost there. It's almost time to get that decision to know what exactly they have agreed on.
Yeah, the MPC, when you talk about them hiking the rates, it's all in a bid to contain inflation.
Obviously.
Of course, Nigeria's inflation still remains stubborn. It's been rising, to about a 30-year high at about 31.7%. And now the projection is that it still is going to hit 32%. But of course, that will be sometime next month when the National Bureau of Statistics will be releasing the official inflation numbers. So, but that's it. But in a couple of minutes from now, maybe an hour from now, we should be having that official announcement.
It should be less than an hour. All right.
Less than an hour. Okay.
Yeah.
All right. So we'll keep the clock counting. Okay. Now let's see. First of all, we're looking at the regional African regional macroeconomic indices, what we call it. So we're starting first with Nigeria, where the central bank, of course, we've been talking about the Nigerian central bank, which has began its two-day policy meeting. And that two-day policy meeting, the outcome will be announced today, whether it's going to be a hike or it's going to be a hold, or it's going to be a reduction. Your guess is as good as mine. But the last time that they met, which was on the 27th of February, the MPC, the 12 members of the MPC unanimously voted to hike the interest rate all the way from 18.75% to 22.75%, with the cash reserve ratio, which is the specified minimum fraction of total deposits of customers, bank customers in commercial banks. That's the amount that the banks have to hold as a reserve, either in cash or in deposits. So that was raised all the way from 27.5% to 45%. That's for the CRL. And the asymmetric corridor, which was also increased at about 100 plus 100 to minus 700 basis points around the MPR, while the liquidity ratio remains unchanged at 30%. With that in mind, we also look at Nigeria's inflation at 31.75%. So, but before now, which is this was the first announcement of the first interest rate hike by the central bank's leadership under Mr. Yemi Cardoso. But before now, we had the interest rate being hiked all the way from the interest rate. It increased by about 25 basis points to 18.75%, which is what you see now, and that was all the way from 18.5%, which it was in May last year. So the 10th consecutive interest rate hike by the central bank, all in a bid to contain inflation in Nigeria. Well, let's see if that is having any effect on the market, on the economy, as well as on the Naira, because all of this have a way in which they interrelate. Now, let's move over to South Africa, where we see the South Africa's central bank, what you call the South Africa Reserve Bank, the SARB, their monetary policy committee will be meeting tomorrow, but as at January the 25th, this is where they left the repurchase rate at 8.25%, which was unchanged from the previous level. Prime lending rate at about 11.75%, the country's inflation rate at about 7.6% in August, and that's all the way from 5.3%, which was in January. Now, the inflation target is also at about, that's what the central bank is looking out for, the country's inflation, at about between the range of 3% to 6%. Now, let's move over to Ghana, another Nigeria's contemporary, if you want to call it that way, because these are the economies that most of Nigerians go to, either to South Africa or to Ghana. Now, Ghana, which has been facing an unparalleled economic downturn characterized by alarming inflation rate, which had risen to about 50%. So, but the country's central bank monetary policy committee, which met just yesterday, left the country's policy rate, that's the interest rate, at about 29%. That's unchanged. Inflation rate is currently down, which we had mentioned before, at about 23.2%, all the way from 23.5%. That's about a 30 basis point reduction for the country's inflation rate. Now, the central bank is looking at a target of 13% and 17% for that country's inflation. Now, from there, we move over to Angola, where we saw as at March the 15th, they held the interest rate at about this, from the Banco Nacional de Angola, BNA, that's in French because it's a francophone country, a French-speaking country. So they left the BNA rate, it was reduced all the way from, actually, it was increased all the way from 18% to 19%. The inflation rate is currently at 24.1%, and that's all the way from the 22% which we had in January. As far as inflation is concerned, the central bank is looking at, for 2024, at about 20.7% for the country's inflation. Now, they also expect that the trend will continue this year. Inflation is still a very big issue there. They expect it to continue this year, and analysts are anticipating an inflation rate of, like I mentioned, 20.7%. And of course, the country's inflation has also been increasing all the way from the middle of last year due to a weaker currency. That's the Kwanza, which is the country's currency, as well as the removal of fuel subsidy, which of course has also been having its own effect for Nigeria. We remember just last year, after the president announced the removal of fuel subsidy, the Naira, as well as the currency, we had an FX unification, which also had the Naira being taking a bit of more of a bashing, all the way from about 700 to about more than 1,000, 1,005, 1,006. But of course, the Naira has been making some gains as at last week, and then of course into today's trading session. So now let's look at Kenya. For Kenya, which is the final one on my radar right now, there was also an interest rate hike which was announced just last month by the country's central bank. That's the Central Bank of Kenya. The Monetary Policy Committee is surprised the markets with a 50 basis point increase in the policy rate, and that's all the way from 12.25% to 13%. And the CBK, that's the Central Bank of Kenya, they cite that the hike was due in its bid to support the shilling, where all these countries, they're talking about supporting their currency. Their currency has not been doing too well. So all of this is all in a bid to support the currency. And then, of course, as well as the fears that inflation is still remaining on the high side for that country. And the rate hike is the third since the current central bank governor of the country, Mr. Thuggy, became the governor in last year. And then it also is the seventh consecutive tightening cycle, which started in May last year. As far as inflation is concerned, the country's inflation is currently at 6.3%, all the way from 6.9%. So it's actually been a reduction for the country's inflation. Now, they will be meeting next week, which is April the 3rd. That's the Central Bank's Monetary Policy Committee. So whether they will hike or they will hold rates or maybe reduce the rate, your guess is as good as mine. So, Ini, that's it in a nutshell for the markets that we track, the macroeconomic indices.
Yeah, well, when I look at those numbers, it seems Nigeria is the giant of Africa. Our number is still the highest. I mean, look at it, 31.75%. And I mean, for instance, Ghana, we know Ghana is coming all the way from about 50%. 50%? Yeah, and now they're heading.
And that was the highest in Africa.
Yes, they were the highest, but now, I mean, we're right there. South Africa is looking at single-digit inflation. Single digits? I wonder what we are doing and what we are missing. And in spite of these hikes, the inflation is still going up, it's still surging.
Well, you know, your guess is as good as mine. And the question is, does the central bank have to raise interest rates anytime that the inflation rate goes higher? What happens if the March inflation report which will be released next month by the National Bureau of Statistics? What if it goes higher? What will the central bank do? Would they hike it for maybe 12 consecutive time? And what impact would that have for the country's economy? Because that's the cost of borrowing. That's the central bank's interest rate. But the borrowing cost, it may favor the banks, but will it favor the country's economy in the long run?
Some economists are already saying Nigeria's economy is at stagflation stage at this time because of the squeeze. And they try to turn attention to actually not just the monetary policy to control inflation, but the fiscal policy. For instance, food inflation is driving our inflation numbers. What is happening to supply? Insecurity has cut out or stopped a lot of farmers from going to the farm for supplies. So what if that is where we should be looking at? Which is why we have continuous hike of interest rates and continuous hike of inflation numbers.
I think also there should be, we've also always been mentioning this, that at some point there should be a policy, a fiscal and monetary policy alignment.
Well, that's why we have the coordinating minister of the economy, because then he balances, he's supposed to bring, conversations from both ends.
And of course, we've been talking about also expanding the economy. We have on one side the blue economy. We have, I don't know if we have the green economy. We also have we're actually a mono economy, which is oil, which is our sole major export. But Nigeria is a country that is blessed with so much of resources. You talk about gold, we have it. You talk about cocoa, we have it. You talk about limestone. You talk about precious stones and so many other, even human resources. But what beats my imagination is, what is exactly the problem? Why is Nigeria not being able to make up,
I guess
its economy?
Those will make up our conversations in the next couple of minutes. And of course, in the next couple of days and months, as long as we continue having this. Thank you so much, Anita, for that. All right, now we're going to delve into the MPC segment and discuss what perhaps they are discussing as we await the decision. But let's take a break. When we come back, you'll meet our guest. That's right, it's MPC decision day in Nigeria. The meeting started yesterday. So many considerations, I know. Top on the list, inflation at above 31%. That's what they've been talking about. Well, we're waiting for that decision. And it's already set when we look at the venue of where that announcement will be made. Yes, they're still in there trying to cross the T's and dot the I's. Before the announcement is made to Nigerians. But that is where the announcement will be made from. We expect, of course, the CBN Governor to be out in just about 30 minutes to give us the decision of the meeting for the second time since Mr. Olayemi Cardoso took over the reins of the regulator in Nigeria. So while we're waiting for them, we will here be maybe speculating, or at least trying to get into their minds to see what we expect. We're actually going to have two guests here, but Mr. Tilewa Adebajo is on his way. That's the Chief Executive Officer of CFG Advisory. We do hope the traffic will ease for him to get here on time. But guess who has made it here on time is Mr. Oji Demezwe. He's the Managing Consultant and Chief Executive Officer of Flame Academy and Consulting Limited. Mr. Demezwe, what a day. But I think we had more anticipation in the last one because that was the first.
Yeah, after several months. Yeah.
After several months,
yeah.
And the first for Mr. Cardoso, so a lot of people,
And then this one now coming just a month after the last one. Ordinarily, usually MPC meets every other month.
Yeah, maybe it's a critical time.
Yep.
After all, we have the target to meet of about 21%. Meanwhile, we are more than 10% more than that. So perhaps...
Actually, if things were normal, Nigeria's inflation targeting range has actually been below 10%. That's single-digit inflation rate. That's what has been our target until COVID happened, and then Russia-Ukraine war started, and then, of course, further issues like the recent removal of fuel subsidy and so on. So we're grappling with a very choking inflation or inflationary trend on the economy. But then there are more to it than,
yeah, because, African countries, my colleague went around African countries, Kenya, Angola, and all of that. Nigeria has the highest. Even South Africa is still handling single digits. We
inflation.
Had Ghana. We had Ghana go from 50 to 20.
Down to 20-something.
Exactly.
All right, but it's not as bad as it is in Nigeria than other countries. And that's why I keep saying Nigeria is a big country with a very huge population, right? And then what is driving this inflation is what we need to look at. I'm sorry to say that before the MPC comes out, but as we watch them aggressively try to rein in inflation, I wait for that point. And maybe here I will throw a joke when that time comes. When the Central Bank's Monetary Policy Committee will again get to that point of what they call monetary policy, how do I put it, exhaustion. under the reign of dear past governor of the central bank, we kept trying to deal with inflation with monetary policy to the point that it got exhausted.
So you think we'll see the same cycle?
I'm seeing the same cycle happening.
With Mr. Cardoso?
Where we keep hiking rates, hoping that it will solve our problem, and we find that the impact is not happening the way we wanted. By the way, I have personally thought that after the last month's very huge and aggressive hike in rates, imagine the cash reserve requirement moving from 32.5, which is already very crazy, to 45%. If you check globally, I'm sure that would be among the worst, among the top 5, worst CRR around the world.
Before we go into this, before we leave that issue of inflation, there's been this conversation about, yes, we see inflation at 31.7, but that is not even the real one, because when last was the basket that measures inflation, when last was it reviewed? To see what the price is now, because you and I go to the market and we see how prices are jumping. The taste of Nigerians have even changed. These things, I think it's more than 10 years since they did that. The tastes have changed, demands have changed, even supply has changed. And the structure of the economy too has also changed. I think, I haven't checked recently, but I'm sure our economy is still based on the 2009 figures and prices and so on. So we haven't considered doing another rebasing after our dear economy. So that means if they do, perhaps inflation will be higher than what we see. Yeah, naturally, inflation, they look at price of last year over this year. This time maybe March inflation year on year, March 2023 over March 2024, or you can do month on month, February, March this year over February. So, inflation captures the movement of prices as they are right now, actually. But the point I'm making is that you and I know how much we have had to buy things. Maybe take the past 6 months, for example. The prices of, let's say, a painter of garri or a bag of rice, or things like maybe a basket of tomatoes and so on. What were their prices in a common market, maybe my two market or which other market, do we have popular, that kind of market, what is basket of that? I'm sure the central bank, they do all of this research. And true to reality, inflation in Nigeria is much, much more than 31.5% or 7% as we, announce it. So, but putting that in perspective, now, it means that we are dealing with even much worse situation that the central bank is trying to, deal with. So I also see an aggressive central bank, monetary policy committee trying to rein in this inflation. But I have some questions to ask. I don't know how long we have for this program. The most important question I'm going to be asking them as they decide in a few minutes is, have they sat down to really consider the real costs or causes of this inflation? If you talk about food inflation in Nigeria, have we looked at how security problems, factor in this inflation? If you look at other, price, rises, have we looked at the key causes? Don't forget that this crisis started when their president announced that subsidy is over. That is, we're having a big part of this price rise through the transport, source, transportation cost rise due to fuel cost, rise too. What led to this, rise in, price of fuel? And it's not Nigeria alone. Even Kenya, South Africa, every country around the world was affected by a rise in price of commodities when the Ukraine-Russia war started, because Russia is a big player, in that market, and a few other allies, in that war are also using, petrol to fight. So when there were restrictions in who will supply oil to the world and who will not supply, there was scarcity. All right, but why would Nigeria, a whole, seventh, eighth largest producer of crude oil, be suffering under this condition? Ideally, in this kind of situation, Nigeria should be a major gainer, not loser, because if we are doing things right, we will be exporting our crude oil at much higher price, making much more money to run our economy, and then having to worry nothing about the rise in prices because we ought not to be importing petroleum products. But here we are. As a country that has one of the largest exports of crude oil, we now go back to import what we ought not to be importing: petroleum products, AGO, kerosene, and all of that. That's why we are suffering from these global, commodity rises. Otherwise, our concern would have been, how do we use the money we make from this crude oil export to build our economy? But we now have a situation whereby whatever we export, and we don't even export enough because most of the crude oil is stolen. Production level is low.
And OPEC Plus is fighting to also manage prices to make sure that the prices remain reasonable for them. So they, at a point, had to cut, countries' quota and so on. So, but otherwise,
we're not even meeting up with our quota.
We're not meeting up with our quota because we have a problem with our production, theft, and so on, and they're still battling with that till today. So the point I'm making is, how come at a time in the global economy where we should be enjoying large inflow of foreign exchange, more than enough dollar for the central bank to defend our currency and all of that, we are struggling with high inflation? Because that's the question we have to ask. That's what I'm saying. At some point, very soon, or sooner or later, the MPC will get exhausted. Because if you can remove petroleum product importation out of our demand for dollar, out of our dollar usage, remove that, you may cut down our demand by 40%. The last, I checked, we're still spending almost 40% of our, dollar, available scarce dollar in buying petroleum products. Even the landing cost is still not what we are paying today. So ideally, if we were to remove the subsidy totally, there will be much more inflation to fight in this country right now. So while our dear MPC experts are looking at these issues, what is the fiscal authority doing to ensure that we remove this petroleum product from this list quickly enough? Otherwise, the inflation will stay in our system, still hotting on. That's one. So when you remove petroleum products, a lot of things will happen. Now again, how do we manage our current export? Meanwhile, we're fighting.
But before you move away from that, we hear Port Harcourt refinery will soon be kicking off, and then we have our Dangote.
Dear Dangote, played game over the months.
It's privately owned, but I mean, we expect that it will feed into the
$1 million
supply.
question for these refineries at the end of the day is, who will supply them with the crude oil they need to refine? Do we even have the crude to supply? Because
we hear Dangote has imported twice now from
Dangote
the US.
is battling with availability of crude oil. And if he has to import the crude to refine, he can't make it available to us because we can't pay for it. And that's the truth. So all the hopes about Port Harcourt refinery, Dangote refinery, and several other modular refineries are coming up here and there. The big question for them is, who will supply them the crude? If we don't do a swap with NNPC, our dear NNPC, if we can have a comfortable swap where if we're subsidizing our own local production, creating employment and all of that, if they have to import the crude, then we are back to square zero. No advantage having these refineries, where they're refining, as a private, institution or refining as a government institution. It doesn't make sense to import crude oil and then refine in this country.
Because we might end up, now we are importing refined petroleum products. Do you see what's importing the crude if we have these refineries?
And all of these are strains on the scarce dollar resources that we have in this country. Look at that at one side. That's what I'm telling you, that MPC will keep, as we wait very soon, you may likely see a slight movement up in NPR. I do not, in this world, expect any further rise in CRR. Otherwise, they will say banks should close down. That's what it means. Lending should shut down. Nigerian businesses should just go on holiday and wait and do nothing else. Pack your money and send to central bank, because central bank instruments like the treasury bills and so on will go so high in price that it doesn't make sense opening that factory with your 500 million or 200 million naira. You open a factory, you're fighting with your staff, fighting fire, operational risk, fighting stealing and so on. At the end of the year, you make a 10% profit. Why would you do that? Pack the whole 200 million you have for your investment, forget about the jobs that will be lost, and drop the money with central bank. They're paying you an awesome 24-25% on that instrument, riskless. These are gilt-edged instruments. You take no risk. Drink your coffee for a year and you get your 24%. Do no work. Employ nobody. Worry about no importation of raw materials and so on. So what we call that in economics, the government instrument crowding out the private sector. When rates go so high, what happens? Investors who should be doing direct investment, local investors or foreign investors, will focus more on their hawks, their vultures, carry their portfolio, come in, get all the interest they can get from your instrument and exit. Mind you, with this increase we are seeing too, note that as we increase these rates, foreign portfolio investors will swarm in. Even the report in February showed that we have had more than 300% growth in portfolio investments. Let's not forget that portfolio investments are short-term investments. These guys are looking for quick profit. And once there's a small cough in your economy, they want to exit with that profit that same day or next day. They have no patience to wait for you. And if they have brought in for you maybe cumulatively about $5 billion, which we use to improve our Naira dollar value, which is improving right now, I know, and they're bringing all those dollars, this amount of dollar is not going to stay. If in the next 3 months they have achieved their profit target, they want to exit, at that point, can you produce $5 billion to give them back their money to exit? If you cannot, whatever gain you have got now in terms of Naira dollar exchange rate will more than worsen in few months down the line.
So all of this just goes back to that need for coordination between the fiscal and the monetary.
There is no other time. Okay.
But the CBN, we know that during Emefiele's time, he did do a lot of intervention. But Mr. Cardoso has told us that brought in about 10 trillion naira, and that is one of a major feeder into inflation that we see today. So he said he's not going to engage in that.
The ways and means that have been done in this country, I think the Senate are still investigating it. I don't want to make certain comments about it. But Nigeria got really careless under the last central bank's governor's administration, where we were printing money, as if it's just tom-tom, right? And now we're suffering it. Mind you, the local debt.
So are you saying it's more about the ways and means than the intervention funds?
Several reasons. There are several reasons. And that's why I'm saying our dear MPC members should sit down and analyze these reasons and go into the presidential economic advisory system and see how we can do proper economic policy coordination. There's no time, than now. The Nigeria needs to coordinate its policies very well.
All right, and thank God we have a coordinating minister of the economy. Let's take a breather.
Okay.
Let's take a breather. We'll be back in just a moment. Just stay with us. And there you have it. The room is slowly filling up at the CBN headquarters in Abuja. Even though the governor is not out yet, with the presence of some members of the MPC and other officials of the Central Bank of Nigeria. I think we have a couple of minutes more just to wait to have the CBN governor come out to announce the decision of the MPC for March 2024. So we're here waiting for them, and while we wait, to make the most of that time, because joining us, I did say we're expecting him. Thank God he's here now. We have right here Mr. Tilewa Adibajo, the Chief Executive Officer of CFG Advisory. We're happy to have you join us this afternoon, Mr. Adibajo.
Thank you.
Yeah, so just before you came, we're talking about the need for coordination between the monetary and the fiscal policy, because we have seen Central Bank in Nigeria hike rate for, I think, about 10 times now, and yet inflation continues to surge. So perhaps the root cause of inflation in Nigeria does not lie in the monetary policy.
Not really. I think from all accounts, I think you have to understand that the last time rates were hiked was last July. July last year, 18.5%. Since then, we hadn't seen any rate increases until February. So you also have a situation whereby in economics, there are leading indicators and there are lagging indicators. So the response to the rate hikes you're seeing at the last MPC, you're not going to begin to see that effect until next quarter or the quarter after that, second quarter, third quarter. So the fact is that they have been slow in increasing rates. The last MPC didn't hold under this administration. The first MPC that was supposed to hold under this administration did not hold. And at that point in time, they did not increase rates. But I think what is important now is that we're beginning to see a synchronization.
So before you go there, when
Yes.
you say, the last one was just in March and there's that lagging effect.
Yes.
So do you expect that the meeting will hold so we can see the impact of that aggressive hike last month?
Well, before I answer that question, which is what everybody is waiting for today, is that I think it's important that we set the tone, because there's been a delay in rate hikes for a long time. Okay, since July last year, we didn't see a rate hike until February this year. Meanwhile, inflation was
Trending up.
Upward trajectory. So you are not doing anything to stem inflation. So now you come in with a 400 basis point rate hike. It shocks the system, and it's beginning to see some stability in the system, because what is important in any economy is that real rates and real yields must be positive. And let me tell you also, you can now see that because of that movement, in February alone, February, March, you saw about foreign portfolio investment started to trickle back in. And we saw about $1 billion coming in. Now, at a run rate of $1 billion a month, we'll be expecting about $12 billion or $13 billion of portfolio investment this year. But that's even small, because in 2019 we had close to $17 billion.
As before COVID.
Yes. So, so these are things that we need to understand. That
Mr. Demezo was just warning us to be careful with those portfolio investors, because they can hop out at any time.
Yes, but it's part of the mix. It's not just foreign portfolio investments that you're talking about. Now, what we're seeing now from this rate hike from last month is a synchronization between monetary policy and fiscal policy. You can now begin to see the impact fiscal policy is having on the support of monetary policy. Because these rate hikes you're seeing, the government has to carry the burden of the extra cost of borrowing. And the confidence the government has to make is the fact that you could see the results that came out of the DMO. Our debt service obligations offshore, we're meeting them. And as long as government continue to meet this debt obligation, government is beginning to look at restructuring their revenues. They're using digital technology. Their revenue profiles are increasing. And I think you mentioned ways and means just before I came on. Okay. So now they're beginning to address the issues of ways and means. They're beginning to pay it down. They're auditing their accounts. And of course, the Senate is also investigating ways and means. So there are lots of things that are now being done on the fiscal side that is also impacting this resurgence in foreign portfolio investments and helping the effort to drive down inflation. Because on this short term, government has to carry this burden of increased interest rates, because the instruments they're bringing out now have to be priced higher. And that means that the cost of borrowing is higher, and government has to continue to meet those obligations to restore confidence in the system.
But what do you think?
Now, the rate hike, yes.
What do you think about our ability to raise enough revenue to deal with these increasing debt obligations? Mind you, as it is currently, Nigeria hasn't been able to exceed 8 to 10 trillion annual revenue generated. And we're currently running a budget of about 25 trillion. And we are adding more debt obligations.
And deficit
and
of
we
10.
are hardly able to pay our recurrent expenditure, pay salary and so on, not to talk about infrastructure and so on. So when you add all of that, there's still pressure. When we talk about fiscal monetary policy coordination, he has mentioned a very good part of it. But my concern is more about how much are we willing to spend to get our refineries working, refine our petrol, and reduce our dollar demand, dollar need to import petroleum. When can we stop that petroleum product importation? It's a fiscal issue. The government's ability to spend to halt petroleum importation. Another fiscal concern for me, how much are we willing to spend in security concerns to enable farmers in Nasarawa, Plateau, everywhere, go back to the farm to produce food? Because, mind you, inflation is, two types. And we are dealing with inflation as if it's all about demand pool in this country. If we can stop importing most of the things that we consume, like food items, and the farmer in Adamawa or wherever can produce our local rice and so on, and they're of good quality, we can invest in that.
Let me ask you, Mr. Demezo, are you ready to consume local, domestic?
Why not?
Because the taste of Nigerians.
I buy Nigeria, I buy Africa.
No, you see, I think that we should not look at this thing in such a simplistic manner. Because when you talk about even importation of fuel, take a look at what they're sharing now at FAC. It was about
a trillion.
2 points. It's now got to 2 trillion.
Trillion.
No, it's got to 2. The last one was 2. So because government, that's what they shared to the states. Don't forget there's federal government's portion of it too. So, I mean, by the time their revenue profile has improved significantly.
After the removal of subsidy.
Yes, and also with other things in terms of increasing oil production and all that. So that revenue profile, they still let us, we're seeing that it's improving. As you can see, a lot of the states are getting more money now. Over the last 3 months, we've seen that.
Yep.
It's on the increase. So there's something there's something in the revenue that is improving. And with that improving revenue profile, yes, you are all right about that. The deficit this year alone is 11 trillion. And the revenue is now more, debt service is more than both recurrent and capital expenditure. So revenue, debt service is the highest line now on the budget. So those are concerns. But the refinancing of this debt, and because the key challenge now in the economy now is that we need to reduce inflation. And once you have set a target for inflation at 21% by year end, then you start issuing instruments that may be in the area of 25% because the objective is to bring inflation down. So I think what is important for us to see now, especially now you've asked me the question with this rate, the issue of this is that from what we can see now is that inflation is still going up. Okay, and you raised a very important point that food inflation is not just about raising interest rates. It goes beyond that because there is productivity and productivity and security issues are the main contributors to food inflation. So those are the issues we need to. They're structural issues that we need to address. So, but again, it goes hand in hand. So let us at least get the inflation under control, which is really what the issue is. And in getting inflation under control, we have to compromise growth. So I don't expect growth to be more than 2.8 to 3% this year if we're lucky. But what is important for us to achieve this year is that we bring inflation down to 21% or below.
So we see the governor is out. Just a minute, we'll get you. The governor is out. I think he's about to start. Once he starts, obviously, he takes priority. But let's just... Exactly. He's right there. I think they're just waiting for 2 p.m., which is in a couple of seconds.
So my prediction is they're going to increase rates by 150 basis points.
150. We're going to find out who's right. What's yours?
I expect that, just like him, between 100 basis points to 200 basis points, increase in MPR only.
100 to 200.
I do not expect any further increase in CRR.
What about CRR?
I think CRR will hold.
Liquidity ratio requirement.
45% is really high at this time.
Yes, I think we will.
Horrible, very horrible at this time.
It's not horrible, but it's okay.
In my view. But
Mr. Dibajo is all for fighting inflation aggressively.
Exactly.
Liquidity requirement will stay at 30%. I don't also expect an increase there.
I agree with you on that.
And also the corridor may remain at plus 100, minus 700.
So let me speak for the economists that said they think it should be a hold.
You've seen what inflation has done. So once you take this up, then you can now looking at stabilizing it at that.
And mind you, most of the members in the last meeting were a bit aggressive about hiking rates. You know, they were a bit hawkish about it. So I don't know whether they have calmed down now. But they still continue that.
Calm down when inflation. And I did see an outlook from the CBN. They expect inflation next month to hit 32%.
So they need to rein it in, to continue their fight. The central bank governor himself actually proposed 450%. Out of the 400 that's done. So I don't know whether he intends to now fulfill
that 50%
the 50%, 50 basis points or 100 basis points. But or, like you said, maybe 150.
But that would be a good one for investors. I mean,
yes.
It will close the negative real, he mentioned the issue of real interest rates. Yes. As we continue to have inflation at 31% and our own rate at 22 or so, the real interest rate in Nigeria is negative 8%. It's a disincentive for portfolio investors. So the more we close that gap,
pensions and the pensioners, we have to think about our pensioners.
The more you attract more portfolio investors.
Yes.
The only caution is that portfolio investors are not good friends with volatile economy.
No,
like
I don't.
They need their money to exit. I don't know how to provide that UFD for
We'll have that discussion later.
Afterwards.
They provide stability.
Let's do the surgery first. I'm talking about how to heal.
No, you see, look, at the time in 2019, we had $16 billion worth of portfolio investment. But it's not only portfolio investments. At that time, you had $16 billion worth of dollars portfolio investments. You had $10 billion worth of, $20 billion worth of diaspora remittances. Government revenues was about 12 billion.
What you need to consider.
So you have to balance. Is everything together you have to look at. You see, portfolio investment is not everything. It's only one of. So everything has to come together so that you have close to about 60, 70 billion sources of foreign exchange. That's what we had in 2019.
But all the sources have almost dried up, except the normal
diaspora.
and even the diaspora is picking up right now. But are we going to continue to sustain that pickup? We'll discuss that maybe after the whole announcement.
Maybe after the announcement. Well, we are still waiting for the CBN Governor to begin that announcement of a meeting that started yesterday, the MPC meeting for the month of March. Let me ask, gentlemen, do you think we'll have another MPC next month?
Not necessary. I don't think it's necessary. I think what we need now is we need at least another quarter. You see, because the first quarter results are not going to be, like we talked about the leading and lagging indicators. I'm looking at Q2, end of second quarter, for us to be able to see properly the impact of a lot of these reforms. So there's so many things that has happened. And I think another rate increase, I think what we're not talking about is the fact that the Naira is gradually stabilizing and appreciating.
But some people say that is to the detriment of our reserve.
It is
because we see the CBN's intervention.
It is not the detriment to our reserves. You see, because if you take a look at reserve management, as long as we are not, our oil production is where it is, our reserve levels will remain the same. Exchange rate mechanisms is a market. What was driving the exchange rate mechanism? Like I told you, in 2019, we had $16 billion worth of portfolio investments. So what happened? Did the United States government put a blockade on the port of Lagos and the Gulf of Guinea? Did the United States government declare a no-fly zone against Nigeria? So what was driving that FX to where it was? It's basically speculation. So higher interest rates will calm the market down and the Naira will further appreciate. So that we can have that.
Are they abating?
You see, speculation is a result of confidence.
Yeah.
When you now have a higher interest rates and you have assets that you can invest in that will give you returns in local currencies, then people will cool down because you're using it as a store of value. So when you people know that there's confidence in the economy, then we'll stop the speculation. And that is why we need to do with our interest rates. Because inflation was going, because they didn't increase rates on time.
All right,
inflation was going higher.
Yeah, the governor has started, so let's join them.
Thank you.
The Monetary Policy Committee, MPC, of the Central Bank of Nigeria held its 294th meeting on the 25th and 26th of March 2024 to review recent economic and financial developments, as well as assess risks to the outlook. Decisions of the MPC. The committee's decisions are as follows. 1. Raise the MPR by 200 basis points to 24.75 from 22.75%. 2. Adjust the asymmetric corridor around the MPR at plus 100 to 300 basis points, to minus 300 basis points. 3. Retain the cash reserve ratio of deposit money banks at 45%. 4. Adjust the cash reserve ratio of merchant banks from 10% to 14%. And 5. Retain the liquidity ratio at 30%. Considerations. The considerations of the committee at this meeting focused on the current inflationary pressures and the need to anchor inflation expectations as well as ensure sustained exchange rate stability. These considerations underscore the importance of the CBN's commitment to the price stability mandate and the need to urgently bring inflation under control to ensure that purchasing power of ordinary Nigerians is restored in the short to medium term. Members noted the continued rise in headline inflation, driven largely by food prices because of supply shortages and high costs of logistics and distribution. The committee, therefore, was of the view that addressing food insecurity is key to containing current inflationary pressures. On this note, members commended the ongoing efforts of the federal government towards addressing food insecurity. Some of these measures include the provision of various palliatives, release of grains from the strategic reserves, distribution of seeds and fertilizers, as well as farm implements for dry season farming. The committee, therefore, called for the full implementation of the federal government's agricultural policies and programs to improve food supply and further advised for broader fiscal consolidation, particularly on the improvements of tax collection and tax to GDP ratio. The committee noted with satisfaction the level of stability achieved in the foreign exchange market in the last few weeks. This, in the view of members, reflects the impact of the bank's recent policy actions and reforms, as well as increased transparency in the market. In addition, the committee noted the efforts of the bank in offsetting verified foreign currency obligations, an action that will greatly enhance investor confidence and attract foreign investments to Nigeria. The MPC also reviewed developments in the banking system and noted that the industry remains safe, sound, and stable. The committee thus called on the bank to sustain its surveillance and ensure compliance of banks with existing regulatory and macroprudential guidelines. The MPC also enjoined the bank to expedite action on the recapitalization of banks to strengthen the system against potential risks in an increasingly globalized world. Consequently, at this meeting, the MPC was faced with the option of either progressing with its tightening cycle or hold to observe the impact of the previous rate hike and adjustment of the cash reserve requirement. After reviewing the balance of risks and the near-term inflation outlook, members were convinced of the need to progress with the tightening cycle. Key developments in the domestic and global economies. Domestic headline inflation rose further to 31.70% in February 2024 from 29.9% in January. Food inflation accelerated to 37.92% from 35.41%, while core inflation rose to 25.13% from 23.59%. Key drivers of inflationary pressure remain the strong exchange rate pass-through to domestic prices, rising cost of transportation, high cost of energy, and other production inputs, lingering insecurity, especially in food-producing areas, and legacy infrastructure deficits. Data from the National Bureau of Statistics showed that real GDP grew by 3.46% in the fourth quarter of 2023, compared with 2.54% in the previous quarter. Staff forecasts for 2024 indicate that the Nigerian economy will grow by 3.38%. Disruptions to the global supply chain associated with pockets of geopolitical tensions continue to pose a key concern to monetary policy. Global inflation has, however, continued to decelerate in 2024, but is expected to remain above the long-run objectives of major central banks. Interest rates of advanced economy central banks are thus expected to remain high in the short to medium term before commencing a descent. Consequently, global financial conditions may remain tight through 2024. Accordingly, the committee will continue to monitor developments in the global and domestic economies to ensure that inflationary expectations are anchored to restore and sustain macroeconomic stability. All 12 members attended the meeting. The next MPC meeting will be held on the 20th and 21st of May, 2024. Thank you for listening.
Thank you so much, sir. That was communique number 151, presented by the MPC chairman and governor of the Central Bank of Nigeria, Mr. Olayemi Kadusu. We now take questions from the media. Please state your name, your medium, and then ask your questions. Thank you.
Thank you very much. My name is Sunday Michael Ogu. I write for Daily Trust newspaper. Mr. Governor, I've got two questions. The first one is that the MPC decision is consistent with some of the public statements you have made about how you would continue to raise interest, tighten interest rate as a way of targeting inflation. My worry, however, is this the only option in town? We have continued to tighten in several MPC meetings, and the inflation has continued to skyrocket. At what point, will we begin to see a moderation in this tightening? At how much of growth are we sacrificing, to rein in this inflation? That's the first one. My second question is, you have also talked about, you've commended the efforts that you have made in settling FX liabilities, as we have seen with your recent releases. But the organized private sector is saying that their funds have been retained for extended period, in some cases over 1 year. What exactly is happening to those funds as far as this whole settling of FX situation is concerned? Thank you very much.
Thank you very much, Daily Trust. Well, two very important questions, one on the issue of tightening and the other on the issue of backlogs of forward transactions. Now, let me say that, yes, from our perspective, the key thing for us as a central bank is to be fully focused on our core mandate. And that core mandate basically is to fight inflation and to ensure price stability. So there's no ambiguity in that, and there's no compromise on that. We are very, very concerned that the purchasing power of the average Nigerian should be restored to the levels that they know it to be. And what we are saying is that going forward, we expect that if the environment is such that requires us to tighten, we will tighten. Our projections, however, indicate that things will begin to moderate from about May onwards. And the projection, as you may know, is that by the end of the year, we're expecting the inflationary rates to have come down significantly. So we believe that we're on the right course. And of course, one particular area of cheer as a result of the actions we have taken is the moderation in the foreign exchange rate, which you have seen. Now, don't take the foreign exchange in isolation because it does have major pass-through to inflation. And to the extent that we've seen this happen and we expect it will continue to moderate, we're confident that these tools and measures that the central bank is using will ensure that the inflationary spiral will gradually be brought under stricter control. Of course, from the MPC's standpoint, the MPC does make decisions based on economic data and, of course, market conditions. So as the next MPC, which I've announced will be taken in May, they will obviously look at the existing variables and make a decision accordingly. I hope that will answer the question on tightening. Then, with respect to growth, yes, there appears to be a trade-off of some sort. But the good news is that we expect the tightening to not be long drawn. That really is the good news. We don't expect this to be something that will subsist into too long into the future. And of course, if the right responses are happening in the economy, then I have no doubt that the MPC will take the decision it has to take to properly ensure that the situation into the future is able to take the growth considerations adequately as they should be. With respect to the foreign exchange forwards, now I think it may be important to say a few things with respect to the context. Now, recall that when we came in September, we had a backlog of forward transactions which were contractual in nature and which had already been, as I say, contracted before we came in. Now, it was clear to us that it was very important in the interest of the credibility of the central bank, which at that point in time was very much in question, that we were able to satisfy and take care of these forwards. And if you recall, during the Senate hearings, I had actually made reference to this and said that this would be a priority to ensure that we take care of these forwards within the resource constraints we had and as soon as we could. And that was why, on a regular basis, I tried to address the issue, address the press, and be transparent as possible to allow Nigerians to know exactly where we stood and what we were doing. And you will recall that during that period, we settled, a certain tranche, and then we got wind of the fact that, well, there were a number of transactions which, quite frankly, had some issues with respect to the genuineness of them. So we said, well, in that case, the best thing may be to let us get a well-reputed organization that can do a proper forensic of the transactions that are so defined as forward contracted transactions. And that was how we came across and brought in Deloitte management consultants who took time, and this really did take months. This is not something that happened overnight, and a lot of this work was going on and people didn't know. But they took months painstakingly to go through all the documents, and to ensure that they had a report which we could rely on. In the course of that, of course, we determined that a number of these transactions did not qualify, and I've said this before. In some cases, you had some requests which well, you actually had some allocations that were made in millions of dollars, which were never requested for. You also had some where they had no naira, and they were also allocated, huge sums of foreign exchange, and the list goes on. And it was for that reason that we refused to validate those particular transactions. We refused to validate them because, apart from the fact that documentation was not satisfactory, in many cases, they were outright illegal. And the law enforcement agencies, of course, are now looking into those transactions that are, as far as we're concerned, not valid to be paid. I would emphasize that if there's any information to the contrary, we would in due course consider that. But as at today, that is exactly where it stands, and the law enforcement agencies are taking a very, very hard look at those transactions. We have settled, and as at today, as I have said before, I will say it again, that the valid transactions, as far as the Central Bank of Nigeria is concerned, have been taken care of. We are also not mindful of the fact that there just may be some stakeholders who, over a period of time, may have had backlogs in one form or the other. We're not unmindful that that could be the case, that some of those may go back, years, a long period of time. We've done what we can to make the market as open and transparent and liquid as possible. So those particular stakeholders are free to access those markets and take care of their backlogs. Okay, but we have met the verified backlogs of contractual obligations as we deem them forward transactions.
Okay, good afternoon, Governor Onyenwachukwu from Business Day.
Sure.
Thank you so much for taking time to explain the issues around this FX backlog, which is the question I really wanted to ask. But quickly, can we get a sense of how much, is still ineligible, they have not cleared,
Sure.
that these stakeholders are claiming?
Sure.
And can we also understand what makes, these claims ineligible?
Sorry, say that again. What?
What makes, those claims ineligible?
Okay. Yeah, sure. I think the figure is about 2.4, I beg your pardon, 2.4 billion ineligible. 2.4 billion ineligible. Okay, and as I said, there have been several cases, quite frankly, that go from documentation, no Form M available, or, as I mentioned earlier, cases where allocations were made and no requests were asked for, or cases where allocations were made and no naira was available. So, the list goes on. So that's a good example of some of the infractions that we noted.
Good afternoon, Governor. My name is Isa Abdulwahab from New Telegraph newspapers. CBN has lifted forex restriction on dairy product. Did the bank consider the impacts of its action on the local market?
Thank you very much. Now, again, this is a situation where, as far as the central bank is concerned, we observed that it is important that our operations are as open and transparent as possible. Because it is this lack of transparency that drives people away from the market. Where the market feels that there's something that isn't quite right or there are distortions, there's a tendency for them to hold back. And one of our objectives, as I have said a number of times, is to ensure that we regulate the market in such a way that it is open and transparent. We observe that in this particular case, only 6 companies are allowed to bring in dairy products and its milk products and its derivatives. Only 6. And we believe that this is oligopolistic at best. And that in any case, we should not constrain anybody that wants to come to the foreign exchange market to purchase foreign exchange from doing so. We do not believe we should constrain them from doing so. It's not our responsibility, it's not our job to do that. We should leave the market open, transparent, and let those who are in a position to deal in a particular area do so. At least, certainly, we will not ban them from the foreign exchange. We will not ban them from the foreign exchange market. We will not. It is, and certainly we will not restrict that market to just 6 players. We will not do so.
Good afternoon, Governor and members of the MPC. I'm Nancy Naji. Governor, I want to ask a question following up from the question I asked on Binance last month, because it's been a long 1 month from the time you addressed us here. So my question is really around the status of Binance and now in the country, which is really unclear, as very unfortunately one of its executives escaped custody just a few days ago, while another remains detained with the Office of the National Security Advisor amidst allegations. You mentioned it here last month, about $26 billion flow from that same organization. So the allegations and accusations of Binance negatively, manipulating the Naira. And this has really led, at least from what I've seen in the last few days, it has led to a sense of ambiguity, as well as a perceived absence of a unified approach from the federal government regarding the matter. My question to you really is around what is the CBN stance on these ongoing developments. I had the FIRS chair, was it yesterday or so, Zach Adediji, talk about, of course, it will not hamper tax evasion issues and all of that. So I would really like to know what the CBN stance is on that. Thank you, Governor.
Thank you very much. Again, a very good question, and thank you for that. And I'll be surprised if it didn't come up, given what has been going on. Well, look, first and foremost, let me clarify to say that the central bank does have, at least we consider ourselves as having the wherewithal to collaborate with other agencies of government. And that is a very important function for us. And where we see we can work with other arms of government, we will do so. And I must say that, and this perhaps should touch on what you just said about a month ago. A month ago, we actually did have collaboration with law enforcement agencies, EFCC, the SEC, and other regulatory bodies as well. And I think what came out of that, quite frankly, has work in progress, but very, very, very positive, as far as I can see. Very positive. Office of the National Security Advisor. So we've been sharing information together. However, in this particular case, the responsibility for regulating cryptocurrency is not our own. It isn't ours. It is strictly that of the Security and Exchange Commission. Okay, that's not our responsibility. And of course, the issue of people who have been held in, and what we've all read in the press. Again, that's strictly speaking the Office of the National Security Advisor. That's not within the purview of the central bank. So unfortunately, there is nothing to report to you, to tell you, but just to clarify that that is really the relationship that the central bank has on this matter.
We have some questions from some media organizations from Lagos. One is from Uche Usim of the Sun newspapers. Permit me, Mr. Governor, to ask the question on his behalf. He said, recently the CBN donated 2.15 million sacks of fertilizer to the Federal Ministry of Agriculture and Food Security for distribution to farmers. Does this signify a return to developmental finance intervention? Thank you, sir.
Thank you very much. Another question that I know has dogged the minds of so many. And the question is, does this suggest a return to developmental interventions? And the answer is no, it doesn't. And let me explain why it doesn't. Because we have been consistent in saying that we will withdraw from direct interventions. We have been consistent in saying so. We have also been consistent in saying that we will work with those who we believe have the capacity to successfully intervene in whatever manner they can. And that, by the way, includes even capacity building. It's not, strictly speaking, direct funding or anything like that. It isn't. It extends to a whole host of different areas. So where we see that capacity is there, the central bank would be happy to partner. And that goes similar to what one had just said about the collaboration that we have had with regulatory authorities and also law enforcement authorities. But let's face this particular issue. Now, the fertilizer that was given out was the residue of an intervention that had been done before we came into office. It was not something that was done directly by us. And the options were either to leave them there to rot away or to give them to those that we believed had the capacity to distribute. And that is exactly what we did with the handing over to the Ministry of Agriculture. In actual fact, the way I see it is that we've taken those particular merchandise and put it where it rightly belongs.
Thank you, sir. I have another question from Babajide Komolafe of Vanguard.
So that's it. We have the announcement there. It's a 200 basis points hike from the MPC for the month of March. And of course, we still have here in the studio, I think, well, they are perfect because Mr. Adebayo did say that it would be 150.
150 to 200.
Yes, Mr. Adebayo said between 100 and 200.
Yes.
So we hit it at 200.
Yes.
I think you had some spies in the MPC.
No. What it is that, you know, when we did the first program on the first MPR, you asked me, I said, if you look at the calculation, then the real hike would have been 700.
700. So we're
to be
heading
able to
to
bring
700.
No. I mean, between 600 and 700.
Now.
Yes, if you look at the real calculation, mathematics, you say, okay, maybe 700 basis point rate hike. But the practicality of doing that at once is not really there. So when you do the 400, and then you see that this exchange rate is stabilizing, then I think the 200 is sufficient for now.
So are we expecting 100 more by May? That's the next
that will
meeting.
now depend on how the events go. Like we said, they're leading indicators and they're lagging indicators. So let's see how the impact of this hike will impact the economy. and will impact rates. So at that point in time, we can begin to see how things would go. So maybe by then, hopefully, they can start to hold.
Mr. Demetre, you were very particular about the CRR, and thankfully, we
it's a
stayed
very
there at
horrible
45.
one. You know, I'm a chartered banker, and my concern is while we fight inflation, do we destroy the economy? No nation can move forward ideally, even though my friend has said we have to trade off growth a bit as we fight inflation. Do you understand that if you collect a deposit in the bank today, you have to, knock down, hold down, okay, let's say a customer brings 100 million. You have to lock down 45 million in CRR in central bank. You have to lock down 30 million in maintaining liquidity requirement. What is left? 25% of that money. Well, I don't want to talk about insurance, premium and all of that. So you really, what you're actually saying is stop banking, stop lending. Otherwise, you are going to lend at a very huge cost. That 25 million that is left from that 100 million, for you to lend it, to be able to make enough money to pay the customer whatever percentage you pay on the 100 million, is going to be stupendous. So the cost of borrowing is much tougher right now. So it means that all the manufacturers in Nigeria hold on to your business until we finish fighting inflation. All the job creation activity going on through entrepreneurs, even we know to raise money in the street today, we pay a flat 7%, a flat 10% on any money. And no economy grows without entrepreneurship. All these individuals who are looking for money, even some of us who feel that we've done banking, it's still difficult to get a normal loan from a commercial bank without all the requirements and documentation and
what about the asymmetric that has been dropped? What's the implication?
The asymmetric corridor is actually to make sense of the need to mop up more money. Now they're saying instead of plus 100 minus 700, they're now doing plus 100 minus 300. That's when they adjusted. So it means that if today now, as they have just added 200 basis points, making NPR move from 22.75 to 24.75, let's call it 25%. It means that if you are trying to lend money, borrow money from central bank as a lender of last resort, assuming a bank or any other person who needs money from central bank, they will lend to you at 25% maximum plus 1. So you can get money from central bank today in Nigeria at 26% maximum, the standard lending facility of central bank. Then if you are a commercial bank, a discount house, a merchant bank, and you want to leave money overnight to keep your money with the central bank for a short period, whether you're doing a repo or whatever kind of transaction, central bank can give you as high now. That minus 700 means that from NPL, subtract 700. That's central bank's deposit rate. So they have moved it from 24.75 minus 700. That for central bank to give to you when you have deposit. To move it to minus 300 will now mean is 21 point something. That's a way of saying central bank has increased their deposit rate, making it more attractive for banks to leave their money to central bank when they have nothing to do with it. For other people who have idle money to bring to central bank, trying to also say that central bank is much more willing to give higher reward for money left with them, or when you buy their instrument, in a way. So that's a more aggressive way to mop up more money in the effort to rein in inflation.
All right, Mr. Debajo, another very interesting, and I think they stayed on it for a bit, was the FX. We see, of course, Naira has appreciated in the last couple of days, and the central bank governor talked about clearing the valid demands, and he talked about how they discovered that about $2.4 billion was ineligible, and he defined some of that to be allocations without demand. Now, obviously, we appreciate that this is coming, out here, but one will wonder how long this has been going on and if indeed it has stopped.
Well, you see, for me, this is no longer news when you talk about the foreign exchange. And I think it's important that we move on. This news has been out there for a while. And it is like, okay, an auditor came and said it's not valid. And they wrote to a lot of all these people, if you have any documentation, bring it. So I think we should close this matter. There are many more important issues when it comes to foreign exchange. First of all, like I told you, I was a bit concerned about the level of speculation. Because if you take a look at the foreign exchange profile, which also includes foreign portfolio investments, but also FDI, remittances, and also what the government puts into what the federal government also puts into that. So foreign exchange is not just one component. The foreign exchange system has changed, and we now have a NAFEM system, and there is no multiple windows. So the rigmarole and the wild rise of speculation we've seen over the last month, we've seen some stability. With the 200 basis points increase interest again, you begin to see Naira firm. So which is what is important. What is more important is that let us take a look at what the governor said in the banker's speech. He said they're coming up with a new foreign exchange mechanism which will involve legislation, which is now work in progress. So the question now is that we're going to ask them, when is this document going to be ready? Now it's work in progress, it's almost ready. So that is what is important, because we need to start looking forward. Because you are now talking about people who have not got their foreign exchange. If you feel you have been disenfranchised, bring your documentation if you have that. So we need to move on, and we need to ensure that the rates are stable. And I think from what the governor said, the most important thing is to restore the purchasing power of Nigerians. Pensioners, when they get their pension at the end of the month, can no longer deliver what it used to deliver for them. We are devaluing the pension. The value of the pension fund itself, which is like 18 trillion, which is an asset we have built. If you take a look at that value in dollars, it's there. So those are the issues we need to focus on. So I'm not really worried about it. And to just refer to what you have said earlier, for me, the banks also have to be fair. You said you're 35%.
45%, you know,
last year was 35.
32.5.
32.5. Okay, so most banks were doing 2 trillion in profit. Okay, so even though the fact that they were restricting your deposits,
so the windfall is over.
You know what I'm trying to say is that yes, so you need to make adjustments. It's a cycle. If the economy is good, everybody will benefit. When everything comes back, that tightening is very important. When banks complain, what banks should focus on now is to ensure that they don't have NPLs. Because what we're going through now is a temporary situation where we have to tighten, we have to get rates stabilized. Again, the banks will now move and they'll make profits next year. Banks are very lucky they didn't impose a windfall tax on them, because if I would advise government to actually have put a windfall tax on banks.
At the end of the day, we're also going to suffer.
No, we're not. You see, that you are in defense, or we can't all suffer, because the banks cannot do better than the economy. Look at all the other companies that are listed in Nigeria. They are suffering from foreign exchange losses. But banks were at an advantage because they were able to revalue their foreign loan portfolios. Other people do not have that luxury. Banks do. And that was why you had a windfall profit this year, which they insisted rightly that you cannot pay dividends on. So we need to be fair. And the deposits that banks have, out of how many billion, what is the total credit portfolio in Nigeria? 30, 40 trillion? Yeah, how many of that? I can tell you that the top 100 companies in Nigeria are taking 80% of that money.
That's a horrible situation.
You know what I'm trying to say? So it's a Pareto rule. And 50% of our economy is in the formal sector. So, and the formal sector also contributes 50% to our GDP. That's a very powerful sector that we tend to ignore. But if you look at the
informal sector.
The informal sector. The informal sector. And
they don't get properly back. They don't get loans.
Exactly. So what has happened now is that when they did that cash withdrawal, they impacted the informal sector, because there is some cash outside the circulation of the CBN now, which has now gone back to about 3 trillion, which is outside the control of the CBN and the banks. That is the money that the informal sector is on. So we need to restructure and we need to rebalance the economy. So maybe this might not be a good year.
When you say restructure, what do you mean? What do you see?
This is what we're saying now, whereby we're going back into the realignment phase of the fiscal side has been the challenge. The fiscal side is what has brought us to where we are now. And now that has been addressed. And as I said earlier, there's significant contribution now from the fiscal sector to the reduction of the foreign exchange rates now.
The governor still talked about, the federal government implementing the agricultural plan and all of that.
Those are all the structural reforms that need to be done. Like he said earlier, it's not inflation. It's not just increase in interest rates that will bring down food inflation. It is those structural reforms that you're talking about, logistics.
We talked about what it costs to move, some food item from maybe Calabar to the north and vice versa. It's a very huge cost. A lot of,
you talk about logistics,
going on
high cost of logistics.
The government. Extortion. on the road and so on. You need to see it happen live. It's a major issue, and that has to be dealt with.
So even as we wind down now, let me start with you. Do you see us meeting that 21%? I know the governor did not mention it now, but
let me tell you here and now that I'm beginning to have a higher level of confidence on the current central bank governor. And I want to advise or commend him that if he can maintain the level of transparency we are seeing right now, from now to whenever his tenure will end, I think he will draw a lot of Nigerians' goodwill towards the central bank compared to what we've seen in the past. I don't want to mention names. So I want to commend him for insisting on transparency and insisting that transactions have to be right before Nigeria pays for it. A lot of racketeering has been going on. And I can tell you, if that can be wiped off, and he insists that the price between the official rate now, what you call the NAFEM, and whatever that happens along the road, I mean, the BDCs and parallel market, if that price gap can be tightly held, it will reduce round tripping, and more transparency will come in, and people will stop speculating on the naira. That speculation has always happened because we know people have believed that a lot of misallocation has been going on, and with that big gap will continue to exist. People will continue to round trip and make money. So I commend him for that. And we are hoping together. Nigeria belongs to all of us. I would wish that 21% target for inflation could be achieved by December. It's a very tall order.
Do you see it being achieved?
I don't see it being exactly achieved, but I see inflation trending downwards as we progress. I don't know whether it will be fast enough for us to hit 21% at December, but I see it crossing maybe below 25%. But I don't see 21%, looking at where things are now. But as we begin to see the impact of the inflation fight that we're going through, maybe from second quarter ending into half of the year, that second half of the year, we can now see whether it's realistic to drop inflation from above 31% now to 21%. But I think it's a tall order. But if you can even begin to see the trend go down, it doesn't matter whether it hit 21 in December or whether it does in March 2025. But once the trend of going downward trend happens, it means that at some point we can even begin to dream again about single-digit inflation.
Single, that sounds fun. Do you see it, Mr. Dibanjo?
Well, there's no doubt about that. Like I said, there are leading indicators and lagging indicators. So if you take a look at the trajectory, obviously, the inflation trajectory now is still going up. And we've seen 2 rate hikes in a month. And the impact of that, we will not begin to see it till fourth quarter, but definitely by first quarter 2025, I think it will even be below 21. If you take a look at the historical antecedents in Nigeria of inflation, the correlation between inflation, interest rates, and GDP growth over the last 20 years, we've done the research, it's quite clear. If you reduce inflation to 12%, 11%, and interest rates maybe about 13 or 14%, you will see 8% GDP growth easily. It's proven in Nigeria. There's that correlation. Inflation at 30%, you cannot see GDP growth. So you need to be able to make the interest rate adjustments to get the economy back through. But for me, the confidence I have here now, like I've said, is that I'm seeing the commitment on the fiscal side. The fiscal side is contributing towards the increase in portfolio investments. The fiscal side is sending the right signals in shouldering this. Because these interest rate hikes you're talking about is going to be borne by the fiscal authorities. And again, as you said, with transparency, commitment, and consistency, I believe that these goals can be achieved. Because the essence, what is the goal, which is what we don't ask ourselves. Nigeria's economy is in stagflation. And what we need to do is to get the economy back to the path of growth. And as the governor said, you need to restore purchasing power to Nigerians. That is the bottom line.
Don't forget our dear president is targeting an economy in the next 8 years of $1 trillion size. So the earlier we begin to ramp up growth, the better for us. So this fight against inflation is, it's like a negative, whatever effect or drag on our desire for a high growth, $1 trillion economy. So the earlier we get over with this fight and begin to move towards an inclusive growth, a bigger economy, the pride of Africa, the better for us.
The pride of Africa. And we see our naira gaining. I mean, that's That's good news. Let's not just focus on
the
negatives.
Yeah, it's a good thing, and like I said,
so I guess that's part of the reason you have more confidence in the present.
And I also want to advise the central bank to please begin to encourage export beyond oil export, non-oil export, whereby the exporter should please use their willing buyer, willing seller window to be able to get the maximum he can get within the market bands of the dollar he brings in. A lot of exporters are not bringing their money to Nigeria as it is today. Let the central bank governor use his magic wand and his wisdom to encourage exporters to bring in their money. Because if I go to the farm and suffer to bring in $1 and you take it to me, in your window that is much lower than the prior market, I'll do everything possible to make sure that dollar does not come in here. Do all your joro in documentation. So
those windows have been combined now.
What I keep monitoring today is on daily basis the gap between the NAFEM or what we call the official, because there's still official rates. Yeah. We're not going to do away with it. The official window, and for me, my personal target is that once the gap between that is up to 10 naira and above, you continue to encourage bad behavior, round tripping. So if they can close that gap very significantly, my dear, that whole thing that causes this speculation will end. Because then all available dollar will hit the market knowing that there's no difference. I train around Africa. If you go to Kenya, Rwanda, and so on, you can pick your dollar from the street, even at a better rate than the banks. And the banks don't have to tell you, bring your tax certificate, whatever, to give you. That's a problem. In fact, when they announced that policy, I said they're still showing us that they're not able to meet demand for USD today. You have to bring your tax to get dollar. What is that?
Okay, so I guess, but we are on that path. And you said that you have confidence in the governor, so perhaps,
so far so good.
So far so good. Mr. Adebayo, your final words, please.
Well, my final word is very simple, as which I've said earlier. The only question I have for you is that this is your so-called parallel market. Who are the people that control the rate? You can't tell me. And that is really where the challenge is, because, like I said, it's speculative.
It's demand and supply.
No, there's no demand and supply. I beg to differ. I will give you the numbers.
If you're asking...
Excuse me. No. There's no demand and supply. That's a myth. The demand and supply is in the NAFEM window. It's transparent. You don't have the demand and supply numbers in the...
No, we talked about speculation.
In the parallel. No, it's not about speculation. So that is an imperfect market. So we need to be very careful. So, but my own final word is very simple. That my biggest concern, I think, which the central bank governor echoed, is that we have 133 million Nigerians in multidimensional poverty. So whatever we do, I have pensioners who I know who are complaining that what they're getting from their pensions cannot buy anything. So we need to be compassionate and understand that whatever we're doing, the priority must be to restore purchasing power to the millions of Nigerians. A lot of us are professionals. We have our survival strategies, but we need to be able to look at the whole economy as a whole, and we need to look at the next 9 months to be able to restore inflation, and then we can now begin to look at the path to growth.
All right, thank you so much. What a time we've had right here, but thank you so much for coming, Mr. Ojude Mezue, Managing Consultant and Chief Executive Officer of Flame Academy and Consulting Limited. Thank you.
My pleasure.
As well as Mr. Tilewa Adebayo, Chief Executive Officer of CFG Advisory.
The CFG Advisory.
The CFG Advisory.
Thank you.
And thank you so much for your passion.
So I've made it. We are settled now.
Not yet. Well, Mr. Adebayo has been owing me a trip to the studio and not virtual. So I'll ask for another one.
No, Oliver Twist.
I know. But that's it. It's 200 basis point hike on the MPR for the second meeting under the administration of Mr. Olayemi Cardoso. That's how much we can take tomorrow. The business studios open, and of course we're going to stay on this, some expectations and implications of this. That'll be tomorrow on Business Morning. Thank you so much for being a part of this. I'll see you tomorrow. Good night.